When we take a look at the way the market responded this morning to a pretty sizable gap down, again, what is a gap? A gap for me is two measurements. Are we below the previous session's low, and are we below the previous session's close? And both those criteria were met on the open today. Our main focus was the S&P and the Dow. So once that happens, there's two tactics that I will use. One, it'll be a very quick 5-minute opening range momentum trigger to preferably a quick pullback to get long. That's my ideal scenario. So you can see that playing out here. So you have your open, market moves higher, market moves lower, and then you really want to take advantage of, if at all possible, your 930 to 935 range in order to get long, or in the case of anything before the 10 a.m. end of the clearing cutoff, focus on the options. And that's really the best way, I think, to handle the volatility of this particular market and the volatility of a gap fade. Certainly not being bearish on such a large gap down, or such a significant, right? Meaning below the previous session's low and below the previous session's close, cash close. All right. And then knowing that, and this is what's going to be so important in terms of being nimble in this market. When we're doing all of this stuff, and we've been rallying for months, great, consistent green grab candles. Back then we had double green trade flags. It's nothing to take a trade in the morning and be open to the follow through in the afternoon. That's AM to PM trading. I do not have high expectations for AM to PM trading in this environment. In fact, as we wrapped up between 11 and 11:30, our only objective between 11 and 11:30 was what? We have some nice long positions built either from the gap fade or the clearing range breach retreat. Let's go ahead and pay ourselves. Let's go ahead and move to break-even stops, or in this case, we move to trailing stops. Because not that I could tell that this market was going to head lower like this, not at all, but because I'm not surprised that it did. Not one bit. Now, if you take a look at the V-score, a lot of folks ask me, Rog, can we use V-scores as targets? Can we use V-scores as a measurement of where the market could get a little toppy or find a nice low? Absolutely. Absolutely. Take a look at these highs back in here and look at where we persisted in finding resistance between that +2 and +3 V-score. I don't want to initiate new longs. If anything, these are targets. And for those of you that are willing to fade the market, that's a great place to think about where we could weaken and head lower. So this is where two things. One, acknowledge the AM-PM contrast, and that's going to be the cutoff at 11:30. AM-PM contrast. And I'm really going to focus on trying to be done winding out of my trades between 11 and 11:30 Eastern. And why this is the case, it's all of this. So when we have a choppy sideways market, we change our expectations from that whole AM to PM sort of longer term grind higher, longer term follow through. We're not in that environment. Really important distinction right now. But I want you to understand when we wind it down, 11:30, and why. Because if we start to reorganize into an uptrend, or if we organize into a downtrend, terrific. If these are both red or if these are both green, no problem. That's back to being a trend. But in a sideways market, different expectations for follow through. And this is how you can gauge your follow through and the timing of that so much better.